Hey guys, sorry about that. I got disconnected. Our fiber is quite bad at this stage. But yeah, anyways, so like I was saying, like the economy always grows. So the chances if you buy Nasdaq is automatically already, if you just buy at a random level, it's already better than selling. Just because Nasdaq is mostly trending upwards. And once it trends upwards, it's really like trends quite nicely. So with that in mind, what I've come to notice on the back testing is that most of the winners or most of the buys is winners. Now I'm taking a lot more buys than sells, so the stats might not show that, but there's a reason I'm taking a lot more buys. So always target a 3-1 to a 5-1 target when you go for buys. Okay, so minimum 3-1 and a max of 5-1 when you are bullish. Okay, and when you are bearish, target a minimum of 2-1 and a maximum of 3-1. Okay, so that's quite simple. Now, this is probably going to be the most important risk management step that I haven't even put it in here, and that is you are there, down below. You are always going to use a fixed stop loss of 25 points or 2,500 pips. So that's just on NASDAQ, 25 points is equal to 2,500 pips. So that's going to be your standard stop loss always. And the reason for that is it's just, I'm not going to go too much into it, but 25 points is just the proper stop loss, and you need to have that. And it still will give you 1-to-5 ratios if the market is trending properly, and at least 1-to-3s and 1-to-2s. So yeah, so 25 points always. And if you want to go to a pip calculator and calculate, you're going to use 2,500 pips to calculate your lot size that you're going to use for that on your current account. Okay, so that's the steps now. So let's go over an example too. Let's go to the live market and see what I'm looking for now, because I did drop the analysis on Discord of what I'm looking. I'm looking for buys, but I'm waiting for that change of character. So at this stage, I'm going to go top down, and then I'm also going to show you an example of yesterday's trades. Okay, so the first example, the first step would be analyze 4 hour. We determine we are bullish. Perfect. Okay, so we are bullish. We are trending to the upside. Okay, then we go to the 5 minute time frame. We get our range going. So we have our high and low, but now remember we are looking for buys. Okay, yeah, so this would be on the candle close and this would be on the wick. Again, you can use the Asia range tool for that, okay, or indicator for that. So Asia, not Asia. Well, it's the Asia tool, but so it's called, let me just show you the tool again. I did show it to most people, but it's the Asia session range by Rob Minty. That's what you're going to use to determine the range for the London. So London for myself is green. So London low and London high. Perfect. Then you're going to wait for either. So there's two things that can happen now. Obviously, it can break to the downside or it can break to the upside. Now, in this instance, it did kind of break to the downside. So because it broke to the downside, there's no trade unless we get a change of character. Okay. But there was no change of character. There was this liquidity grab to the upside, but then it just melted through. And since here, no change of character yet. Let's see, maybe now it might actually change character now. So this was the last low point here. Sorry. So if I'm looking for change of character, I want to kind of determine the waves. So from this low to from this high to this low, so that's the range. Then we created a lower high. Then we created a lower low right here because we created a new lower high, and we created a new lower low. So we are in this range now. So if we get a break to the upside, we have a change of character, and then we might look for entries on a fair value gap. Okay, so fair value gap entry, and then target whatever we target. 1 to 5 or 1 to 3. If we get them out lower from here, there again isn't going to be an entry until we get that change of character. Okay, so we're just waiting now for that change of character, and then we're going to take an entry. So that's today's trade. So there's no trade yet, unless you were looking for sales. So if you, let's say you were looking for sales and that would have been valid. So the first thing you would have done is this would have been on the body. So you wait for a close. This would be on the wick because you're looking for sales. So you're pushing in here, and then we have a break below. So you would take a trade straight on that break. Okay, right here, boom. And this would have not taken you out. I actually hoped it would, but because then I could share the loss and then the win afterwards. So that would have been actually then a proper trade. And remember, 25 points always. So that's your 25-point stop loss. And you can see that's enough breathing room for the market to do what it needs to do. And you would have targeted a 1 to 2 or a 1 to 3 max. So 1 to 3 would have also been hit, and they would have been your trade. So actually, bad that I haven't taken sales, but it's just like each time I take sales on Nasdaq, I'm stressing. But if I take buys, I'm pretty confident. But again, this would have been a very valid trade, and because again we were in a premium zone on the 4 hours. So from there, if you can just see here, we would have taken it from here. So that's a premium on in the range that we were currently in, from this low to this high. That was in a premium. So we could have, for ourselves said, okay, we're selling into a discount, and then we're looking for buys. But I won't take, if you take a 1 to 3 win, just be done for the day. That's really good. Okay. So that would have been a really valid trade. Yeah, and you would have gotten your 1 to 3 quite easy. All right, so let's go to yesterday. So I'm not going to cherry pick anything. I'm going to go through the last couple of days, okay? Because there was quite nice trades. So yesterday we were also looking for buys. Now let me just highlight this. I'm going to go to the high time frame and show you why I was looking for buys. Okay, so again, this was the high point, this was the low point. So if I'm looking for buys, it needs to be on the candle close there. So I'm waiting for a candle close above before taking my buys. Okay, I was looking for buys because on the high time frame, because on the high time frame, we were in a premium zone. We were actually bearish on the high time frame, but where's my market now? There we go. Okay, we were actually in a bearish, bearish because we created like this little structural retracement. So we were on our way to the downside, but because we created kind of a new low point before the session started, and with this 4-hour, bullish candle there, we could see that in this range from that point to this point, we were in this zone here. So that means it's been a premium on the bearish side, and we were bearish because I saw this as a low point or lower high that got broken. So because I saw that as a low point, I was expecting a push into this wick, this liquidity wick here before dropping, and I was looking for buys in the session. And so that's why I was looking for buys. So I was bullish in the session. So all that needed to happen then was a candle close above my London range. Okay, so what happened was we were coming to New York session. We were trending down here. There was like equal lows created here, or not even. Yeah, I didn't even create that low point here, but I wasn't stressed. Like it came up, and then we got the close. So this would have been your entry on the candle close. 25-point stop loss. Again, the market did come quite close, but it didn't quite reach us, and sort of been a great 1 to 5 trade. Okay, 1 to 5 trade. Now you can really confidently take 1 to 5s when you're buying, but if you're just starting out, you can take 1 to 3s as well. That's fine. Just make sure your trade is good. Okay, so that was also the yesterday's trade. Let's go to Friday's trade. Friday's trade didn't quite. Friday's trade got a break even. So break even strategy, you can decide how you want your break even strategy. Mine is a 1 to 3, 1 to 2. If I'm targeting 1 to 5, 1 to 3. If I'm targeting 1 to 3, 1 to 2, then I'm going break even. So again, this trade was, we were looking for buys because we were still bullish and we were in a, yeah, so we were still bullish and there was liquidity above. Yes, I was expecting that liquidity to get taken out on the high time frame. So looking for buys, we got this massive candle. And again, even though it's a massive candle, we take the buy because there's momentum in our favor. 25-point stop loss. So stop loss would have been there. And I know it seems like it doesn't make sense, but guys, just trust me, don't backtest this stuff. It really works. Okay. So this would have gotten you an easy 1 to 3. To be honest, if the trade starts, yeah, I won't look for 1 to 5 even. So 1 to 3 would have been decent. But if you went for 1 to 5, you would have taken a break even if you put your stop loss to break even at 1 to 3. Okay. So that would have been basically a break even trade. So let's go to the previous day again. Okay, so mark out the high, low. So I'm literally using every example that I can. I'm just gonna, I think this is gonna be the last example. You guys can go and back test it yourself, but it really does work and works proper. Okay, so let's go to the high time frame. So on the high time frame, we were actually looking for sells with this trade. Just check and make sure. Okay, right, yeah. So we were definitely looking for sells because we're expecting a retracement. Okay, so we don't know where the retracement can be. But when it's busy creating a wave or like this thing, it's basically 50-50. So I wouldn't actually trade something like that because it's not clear if it created a high point yet or if it's still busy, pushing to the upside. So you can go buy or sell with this. And because it's 50-50, we also got some quite um, it's like bad price action to actually take a trade in. Because yeah, we got like this wick, like look at this, push to the upside, push to the downside, and then we found our direction in the proper direction. So yeah, I would have looked for sells, to be honest with you, if I really had to. So what I would have done is I would have waited for a push below, or I would have waited for change of character on the 5-minute, and we actually didn't even get a change of character, to be honest, because this wick, that's not a change of character, and even if it was, it didn't leave behind a fair value gap or proper one. So yeah, there wasn't really a trade here. And that's why the strategy is also good because if there's no trade setup, it's quite clear. Now again, you can view this as a bearish change of character. You can. It's not like depending on if you're looking for the closes or just the wicks. But personally, I like to use the wicks. But let's say if you did see this as a change of character, so it's bullish, pushing up now. Okay, pushing up this last push up and then change of character to the downside. That's fine. You would have taken your entry on the fair value gap. So the fair value gap right here. No, there isn't actually. There's no fair value gap. So there really wouldn't have been an entry. Even though you can see this as change of character, there's no. Oh, no, there's a fair value gap right here. So that's your fair value gap. And you would have taken maybe this whole wick, or it doesn't even matter because you anyways going to use a 5 or 25-point stop loss. So if you're taking your entry right there on the fair value gap, 25 points, that would have been a loss. Okay, so you would have taken a loss there, great stuff, but it's fine. Remember the hit rate is only 30%. So, and the hit rate is 30% if you are trading, because you don't, it's easy to see the stuff now when it's done happening, but in the live market, it's quite difficult to see what's happening. Okay, so go and train your eyes, go and backtest it with the software, please, guys. It's super important. But yeah, that's the strategy. I hope you understand. If you don't understand, please let me know so I can explain it to you. But yeah, it should be fairly simple. So let's just go over quickly again with the annotations that I made. So I'm going to show you the annotations now. I just want to quickly go over the steps again. So remember, start with your 4-hour analysis. See if you're bullish or bearish, where you are in the price range. Okay, and then you mark out your London range. So you obviously have to wait for London to finish. Then you wait for a 5-minute candle close above or below, depending on your bias, and you take the entry straight on that. if you get it, but a lot of the times it doesn't just give you a break in, above or below on the 5 minute with the close. It grabs, normally it grabs liquidity in the opposite direction. But if it gives you the close, take the entry. Okay. If market pushes in the opposite direction, view it as a liquidity grab and wait for a change of character and take your entry on the fair value gap. So when you get a change of character, that pushing in the opposite direction, wait. Or let's say if it's pushing in the opposite direction and you get your change of character, that means if you are bullish but the market opened bearish, you wait for it to become bullish, change character, and then you take your entry on the fair value gap. If the 4-hour structure gets violated, there's no trade. If it gets violated in the opposite direction, you're looking for trades, and you always target on the bullish side a 3-2-1 and a 5-1, okay, or even a 4-1. So nothing less than that, because it will give you, if you ride with the direction, it will give you more than a 3-1 most of the time. And on the bearish side, 2-1 and 3-1, not more than 3-1, just because overall, yes, you can get 1 or 5-1s, but overall, it's just statistically wise, it's better to go for less on the sell side. And if you are up, or you always use 25 points stop loss, okay, and 25 points and 2,500 pips stop loss. Always super important. Just because it's NASDAQ, and yeah, and you can go and backtest yourself. You can see if you want to use different stuff, but again, it's whatever works for you. But this is what I've gotten out of almost 300 trades, or more than 300 trades of backtesting. So yeah, so you can also go and do the work and see what works for you. Okay, cool, guys. If you have any questions, please let me know. I'm just quickly going to share the annotations that I made for the Discord channel here. So this was the trade on yesterday's trade. So London high, looking for buys. There was the candle close. We got a push up, but it came back to entry, but it didn't take us out, and then it pushed up all the way to 1 to 5. 5-minute close, always 25-point stop loss, 1 to 5 all taken. And that's as simple as that. And then, yeah, this is also the strategy that I shared with you, just like something you can go and print. So what you can do is you can, if you want to open it up, just download it. It's going to show something like this. So all you do is you just right click and you say open with Adobe or some sort of PDF reader, and you can print it for yourself, right? You can print it out for yourself. Yeah, so you can print it out. So this is how it looks. Shows you trade management. So you can fiddle with this. You can decide what you want to use for trade management. But I'm just using, go even at break even 2 to 1, and yeah, risk per trade always the same, or not always the same percentage, but always the same 25 points. Okay, that's important. And yeah, the time frames, so everything in the entry criteria is, yeah. That's all you need to know, guys. But let me know if you struggle, and let me know how it works for you. And also, please go and backtest it. If you haven't gotten the backtesting software yet, please let me know so I can send it to you. Thanks, guys. Cheers.